Wednesday. Now, we started the game once again. Strong action. Do not chase this because you saw the engulfing later. This was important because we identified the teal algorithm at this time. Let's take a look. It's about 9:53. Yeah, we identified the teal. I think a little earlier than that. Yeah, right. 9:40. We've already identified the teal algorithm. So that turned out to be quite important because you saw how the teal, right, turned into some sort of resistance here, giving us a confirmation. Right, 9:40 was about, yeah. Right, you saw the possible zombie trade, right? If you wanted to take a zombie here, you have to understand, right, that we were selling very aggressively. I mean, we were buying very aggressively in this green algorithm here, and you saw some tapering in the orange. So if you wanted to take a zombie here, you could have taken it on the break of the orange. Yeah, and you would be, well, very happy to see the green selling precision here. Ideally, you don't try to take this trade here unless you know what you're doing. But it helped identify this green selling. Now, this green selling became very important because we also identified the magenta quite early on in the morning here. 10:15. I think much earlier than that, the magenta. 10:15, yeah. So once you identify the magenta, you had to wait for that confirmation to start forming. We had that orange. Yeah, wait for 5-day close. So you're probably waiting for that cup to start closing here. You see how important it is to be able to identify the algorithms right there. Now, if you didn't have orange here, you wouldn't see how penny perfect this is. You would have caught this or tried to catch this thinking it's a handle. There's sufficient liquidity. I think that's ideal. There's also the green that started appearing here. So you knew that there is orange algorithm. You knew that there was a strong support here in the 5-day moving average. You would be more careful, right? If you wanted to short this here, which is a sound structure, it's not bad, but just lack of sufficient liquidity, and it wasn't meant to head down. So if the bears wanted to bring it down, this would be so much more ideal, right? Or if it's going to go down even further, like that. Now, understanding why it will go down further, it's important. You need to know that there is range here for that blue algorithm in a 30-minute chart. So this was at this point, I think, right here. Right. So if this wanted to head down, right, there's this blue algorithm here with that liquidity. So you have room to head down. You certainly cannot be over leveraging at this point here with such a thin structure. Thereabouts at that teal algorithm that started forming, right? Well, personally, I wouldn't have caught this trade. Just not ideal. We were just buying up in orange here. There was only one trade that I caught today, and that was here. So you see, once it started buying up, it's still beautiful. A break of teal, right? We had a buying continuation. If you wanted to take that trade, there was also very good risk to rewards here by understanding the buying continuation here. If you were to chart the orange, that's quite a tight range here for you to stop your trade. Your only worry here, if you wanted to take the trade, was if it started forming another nested structure because of the liquidity here. So I would take calls if this formed, right? And you had to be very careful about this if it wanted to form, if you wanted to force a trade here. You must know when to stop out, either here or even near to where the magenta is. So you have your range of your risks you have to learn to manage and know when to re-enter if you're wrong. And if this wants to head down, right, you know when you can also re-enter. So it's important to know that when your setup has gone wrong or has gone out of your risk parameters, so you know how to exit your trade and you know how to re-enter your trade based on your risks. And so yeah, this liquidity here, pretty good. Yeah, I would have waited for this. But if it didn't happen, so be it, right? You don't take the trade. It's as simple as that. You never truly miss this because I caught the trade later on by staying focused and by having good discipline. Also, waited for this to start closing the cup, right? So we had the cup close. We saw teal still building liquidity. And at this point, why do you want to short this? Practically no reason, right? I want you to take a look at the magenta liquidity here. There's one magenta liquidity here, and obviously from the cup that closed earlier. You don't see the market breaking the magenta or even attempting to grab the liquidity. Absolutely no reason to be shorting here until you have more confirmation. Now, the good thing about this is that we've already seen that seller here, right? There is an aggressive seller right from the start. Do you see him or her or it or whatever appearing again? Absolutely not. So if you don't see the seller even trying to participate in the market here, there's no need for you to participate it as well. There's this need for you to get into the trade, so you try to short it. I would challenge you instead, and I mentioned this about a comment regarding inverse head and shoulder pattern. I can't remember when, but I mentioned that if it wants to dump, you will not miss it. It will re-enter back into the magenta here. Otherwise, it's going to be the head for the inverse head and shoulder pattern. I want to find that comment here. Here. Otherwise, it's always a nice head for the inverse head and shoulder pattern. I talked about here. So if you want to short this, wait for magenta. Otherwise, it's a nice head for the inverse head and shoulder pattern. When you have that sort of planning in your head, you will not feel that you're always missing out. You don't feel you have to force a trade. You will see things even better in terms of perspective. Now, this particular trade I took here, this one's important because I want you to see the strength of the algorithms after we close the cup. So I want you to understand this. We closed the cup. The bulls tried to build liquidity with the teal algorithm, right? And it was insufficient, but they continued trying, at this time in a stronger pink algorithm right there. Now, this concept is not new to you. You've seen me use this concept for puts. It's when there is a stronger controlled algorithm. In this case, the pink is a stronger controlled algorithm for the bears, right? Because they are selling in more controlled sense. And when they're selling more controlled, this tells me that the bulls are trying even harder, right? So teal wasn't sufficient. They ramped up the intensity with pink, and there you have it. You have to break here. I took my trade here. I closed it pretty short. Now, I was quite, I would say, little anxious and hasty to quickly get a trade. So I went very, very deep in the money. Now, when you go deep in the money, let's take a look at my trade here. I was, well, it's a 5-figure trade, right? And you notice it's just such a small move here. But you have to understand what I was trying to do. When I buy something really, really deep in the money, what I'm trying to do is just an easier way of buying shares. For this particular trade here, I don't remember. I think 40, 50 contracts. Basically, what I'm trying to do here is if I buy 50 contracts here, for example, SPX contracts, basically I'm buying 50,000 shares of SPY. That's what I'm trying to do. Now, when I do that, I just have to fill 50 contracts compared to filling 50,000 shares, which it's not great. This is probably, I don't know, lots of money, I guess, 30 million. It's crazy, right? But 50 shares, 50 contracts is so much smaller in value, but yet I have that sort of leverage. I enjoy the move. At that point, it was about 8 to 9 delta. So I practically enjoy the entire move here. When do you do this? Now, you do this when, well, for sure, you have certainty in your precision algorithm because you too enjoy the loss of that 8 to 9 delta if it heads down. It's like buying shares, right? And you have to do this when there is, well, very strong continuation trend. Right? We have not tested the previous low just as yet. We were always creating newer lows. You notice that, right? So understanding that you have some certainty, you take a trade here, right? And I was truly waiting for a stronger breakout, but it didn't happen. Well, orange is good enough. Yeah, I took the profits here. I imagine if I took it here instead, this would be so much better, right? I would have made so much money, but so be it. You know what you're trying to do. I reached my target. I call it a day. So this is a cheaper way, a cheaper way, technically speaking, to buy shares, to be trading shares. You need to understand the problem with this as well, because, shares you can hold, right? But not 0-day to expiry options. No matter how deep in the money you are, you can technically, with risks, possibly go to zero. You need to understand that. But that's the power of leverage. The reason why you're trading options is you're taking advantage of leverage. You have to learn how to use leverage. Leverage is a very, very strong weapon. If you're not trained to use it, you will hurt yourself, just like any other tool in the world. So quite straightforward trade here once you understand the bullish control and how this algorithm was just building structure. As so, you notice it's, well, technically speaking, a nested inverse right shoulder right there. But understanding the algorithms is very important. You see that the bulls were trying to build strength here. Now, the better trade here for the day, now I called it a day here, wasn't feeling very well. But a better trade here will be the one that I was trying to tell you about with the cup and handle here at the 30-minute here, right? You have to understand the macro structure. I talked about this. We closed the cup, right? And we were technically forming the handle, right? We formed the handle here with the green. That's why we broke out for the day. And there was a larger cup here that we closed. I talked about that as well. So I said you wait for this and wait for the microstructure here. Now take a look at this microstructure that started forming the handle, and that's where the pink comes into play. So if you, identified the pink, then you would have been able to see the bulls trying to build this liquidity here. Now there is another microstructure here in the teal. If you were to chart your teal diligently, you will be able to see your entries quite clearly right here on the break, and understanding the breakout of that orange. Right, initially we broke out in that orange to help you manage your risks, and this came to be a very beautiful trade because thereafter we started just trending up in that magenta. If you had runners, you could just manage it in that magenta here. This would still be very ideal. A very beautiful trade here, almost 2 points if you held it and protected your runners there. But I would have just took my profits here, call it a day. Right, so understanding how to be looking out for the macro structure and translating that in the microstructure as well is very important for you. So very important for you to also realize the need to not short this or call a reversal if there is just no clarity. Now, the only time it broke out of, a secondary magenta will be here. Granted, you can take the puts here, but I wouldn't, because where's the liquidity for the bears? I want to see the magenta liquidity here, which is why I mentioned wait for the cups to close. Right, I mentioned the way to short this. I have to understand this. The way to short this is, wait for the cups to close at that 665 pink, 665 pink here. You understand where the liquidity is. This is the bearish liquidity. So if the market wants to grab the liquidity, this will happen instead, not this initial one, unless we do have more liquidity that's being built here. And I want you to see the selling continuation. This is why you have to chart diligently. If you were able to chart the pink, you will see that the selling is always in the pink. and the pink selling is controlled by the bulls. When you understand that, you can be looking out for a trade. And this is why I mentioned, if you were waiting out for a magenta before you shorted this, you would not be biased with this breakout. Instead, you will be treating this and having your focus on trying to see if this is the head for the inverse head and shoulder, which turned out to be. So understanding that, when not to call the reversal, when to be setting alerts, going away so you don't confuse yourself. And the worst thing about trading is when you have doubts about yourself. You have second takes, you have second opinions on your own trade during trading, right? You have thoughts of going long, going short, all within seconds of you making a decision. Now, that's when you know you have to walk away, because that's the market telling you it's indecisive, it's making you indecisive, and you walk away until you have more confirmation. So if you are not able to see a trade, this is why I always say, if you're not able to see a trade, if you're not able to see a setup, then there is no trade. It's as simple as that. And some of you will be confused. Do I go long? Do I go short? The market's not giving me clues. Then go away. Set alerts, walk away. You're not going to miss anything. I miss plenty of trades, right? I miss this. I used the word sparingly, missed, in quotation marks. But I just needed one trade here. One with confirmation that I could take more risks. And I closed the day. 5 figures. Now, understand, you're playing this game for your own objective. You need to know how to play it well. Use the tools to your advantage. Now, don't be over trading this. You're not trying to get everything right. This is not an exam where there are 10 questions. You have to get all 10 questions right. Now, you understand that, isn't it? So you don't have to prove anything to anyone. Now, if you want to practice this, sure. Do it on paper trading, do it on a demo account, and you practice this, right? You can take 20 trades to everyone. And from there, you're able to fine tune and understand your setups and your risks parameters better. So quite a straightforward day. It's quite straightforward. Now, if you're the type that says let's just buy calls and let it ride all the way up, fine. If you're buying shares, or in this case, as I did yesterday on Tuesday, if you were selling puts, then just let it ride out, because time is on your side. So if you are buying calls, right, that term itself, that you're buying an option that may expire, that worries me, because I don't know your strike price. I don't know where your risk parameters are. Do you even understand the extrinsic and intrinsic value in the 0 day to expiry if you take an option? You just have to be very careful of pullbacks. Today we were lucky, isn't it? There's very little pullbacks. But for the days where there is like deep pullbacks, retesting a previous low, for example, your contract may be in deep trouble. So do away with the very lazy interpretations of what others may say, just buy calls or just go long. These are very lazy interpretations of trading. It's like watching a football game and say all you have to do is throw the ball. You see how lazy the interpretation is without breaking down the technicals of how it's done. You have to understand that and be able to discern yourself from the armchair critics versus the real professionals that have be able to break down the technical understanding of this. And you have to break down the technical explanations for yourself in your mind so that you are able to take a better trade. So it's quite a straightforward day. Looking forward for Thursday and Friday. You notice I always say that, and that's the only reason I say that is because the algorithms were very clear. Penny perfect, most of them, so it helps you to make good trading decisions. Right, so start of the day showing us very strong selling precision algorithms. Right, so these are important, right? So pay close attention to that. You don't have to chase them because they come in handy much later. See how the blue came in handy. The green, not so much. but the blue certainly did. So first trade of the day, let's take a look, was the magenta, isn't it? Right, so understanding the magenta, I want you to see here, once again, dual algorithms. Do you see it? Let me show it to you. Orange here, and you see the dual algorithms for the magenta. Right, not so easy to catch this, but subsequently you saw the larger head and shoulder pattern here, because we grabbed the shoulder here of that. So it's much clearer later. Once you see, once again, another head and shoulder pattern of that pink algorithm that we identified. And so this was also a dual algorithm setup here. But that's not the blockbuster trade, isn't it? Because if you have difficulty seeing this trade, and let's see if I caught this trade here. I'm not too sure if I did. Yeah, I caught the puts, right? You notice I took a spread. Yeah, that's why. This is important information. Because as I was mentioning, if you don't truly see a clear structure, because frankly speaking, this is not that clear, isn't it? Because there's a nested right structure, because we were in the dual algorithms here with the orange and magenta. And so you noticed, if it's not a clear trade, don't take it. Well, you're not truly missing out, because the larger trade is later in the day. And this is why I took a spread. Now, I will talk more about this in future, but let's understand why I took this spread for now. I mentioned that, I mentioned how magenta appears to be in control, isn't it? I talked about that, but if you're unable to manage your trade here, take a spread. Now, my stop loss is about $1 per contract, right? Thereabouts. If I'm taking something that's out of the money. In this case, I took a strike for $1. Right, that's my complete stop loss. I figured that the magenta was in control. It probably could be bearish. So I took a spread here at 10.07, right at the break here. So you see, instead of taking a long put or put outright, I took a spread. In this case, it's a bear put, which means it's a spread that is betting on the downside. And I closed it about $3, so that's a 300% trade right there. Now that trade alone gave me 5 figures, right? So you can imagine I took about 25 to 30 contracts there. I think 28, and I have another long put here as well, but it got stopped out. So you see, my long put got stopped out, but the spread survived because I understood that there was a chop here. But yet I knew there was bearish control with very little risk. So understanding your risk, managing it along the way. So it's quite a straightforward trade, this one. Now thereafter we started forming this blue rhythm. And this was important because this means that the bears need to grab more liquidity. If they wanted to head down, this was the structure I was looking for. But we trended up that magenta throughout. And there is this trade here that I took that you have to know. Now we identified the blue then, so you see that we were wedging. I can't remember, was it episode 3 or 4 that we encountered a wedge? And I talked about that. And this is the same case again. But in this case, this is the opposite of what I was talking about. Because in this wedge, the volume never decreased. So if this volume never decreased, this is a sign that it's heading up. Now, this was when I knew to take the calls here. Right, I bought calls. And this brought me up to 14,000. 1337. When did I take it? Right there. Absolutely. That was beautiful. I took it at the wick here, at the bounce of magenta. So you see, even though I had an idea that it may be going up, I waited till a good support where I could stop my trade if it didn't work out. Understanding the blue, I saw the wedge forming. Volume wasn't decreasing. It was, in fact, remaining the same or increasing. And this means that the buyers are trying to push this up. And you see it happening. We break out and in that stronger orange that we already identified. So this was quite a straightforward trade. Now you have to understand the logic behind this. And this particular, this is a buying algorithm. Now, in principle, the higher the price, the less buyers there will be. Do you understand that? So say there are 10 people who want to buy at this price. Okay? And as it gets more expensive, the less buyers there will be. So 8, 6, 4, 2, you understand the idea. This is, technically speaking, this should happen because this is the laws of demand and supply. When something gets more expensive, you have less buyers. You understand that. Now, this is the resistance, which means there are sellers here. This is pretty fixed, right? Because it's about the same price. You notice it's a gentler slope. So when it's a gentler slope, you can assume that the price is, well, almost the same. So this is a consistent volume of sellers. So if this volume decreases, technically speaking, you have more sellers than you have buyers, which is decreasing as it slopes up. So this will head down if the volume reduces. But in this case, as I mentioned, the volume is increasing all the same, which means that the buyers are continuing to buy even though it gets more expensive. And this means that they are going to break out of that seller because the sellers have remained consistent, but the buyers have increased even though the price is increasing. So understanding the volume is quite important here. Now, one way to see this more clearly is to just change it to the 5-minute chart, 2-minute chart. Maybe you go to a larger time frame within 10 minutes. Because this is just, well, only half an hour here. So if you go to 30-minute, you may not see it. I would suggest 5 minutes. It's pretty clear on the 5-minute chart. And you will see that the volume has not decreased. It has remained the same or increased in this wedge. So understand the principles of that wedge. This becomes very easy for you to understand. Now, does it always work? Because our interpretation of the volume and the price is, well, I would say it's an estimation because we don't have the exact figures. You notice it's just a visual representation of the exact volume. So you have to be very careful. Sometimes we interpret it the way that we want to instead of what it really is. So one way is to look at the orders and the order flow. But that's for another time. I can also, see that there is no fresh orders that's bringing down. So if you have Bookmap, for example, you will see, well, let's see if I can drag Bookmap over. I'll just show you a simple representation. Okay, something like that, right? Something like that. So this is Bookmap, something like that. Now these are, well, prices here now, right? So these are orders that are selling, right? Okay. So one way to see if the selling orders have transferred down will be when you see this reducing in volume and you see them transferring down. This means that someone who wants to sell at, let's use the nearest one. Someone that wants to sell at 670 has decided, I don't mind selling it at 668.97. And so you see this volume decreasing and transferring the sales down to a lower price. So, there are intricacies like that you have to, pay attention to. So this is quite important. You have to pay attention to in future. I will obviously spend some time to run through more of how to look and interpret map like that, but it's better if there's a live setting where I can show you how to apply it in a real trade instead of just theory. And you see that happening now. I'm trying to teach you that here in a live trade setting. So when you see the same patterns, when you see the same behavior of the buyers and sellers, you are ready, you know what to be looking out for. And so probably the bigger lesson here today, which is this, and this my beautiful trade here. This was a very beautiful trade, and you notice just very aggressively protecting my trade because I'm just not well and trying to ride up this. Even though it's a wedge, you have to be very careful because, as I mentioned, the sellers from a higher price point can decide to sell at this level, and this can still wedge down because the volume can appear to have increased over the time. So wedge plays, just be careful. Not my favorite. My favorite are, obviously, you know that, are the cups and handles and head and shoulder patterns. Yeah, so that's it for Thursday. Friday was quite straightforward too. I will show you some of the trades that I took here. Right at the start of the day, you see very strong buying. By now, this should be already textbook for you to be waiting instead of chasing trades. But you see there is varying strength in the buying. We saw from the green, we've weakened, slightly tapered to the blue. And then you saw how the orange started forming. Now this orange, it's a pretty nice head and shoulder pattern in early trade if you wanted to take this. I think I talked about it in the start of the day. I saw some orange algorithm forming a certain structure here, right here. Right, so you saw the orange starting to form some structure there. So yeah, you could still have taken a trade here. Now, there is a certain challenge with this trade, and that is that I have not established the selling. Right, so would be a little bit more difficult to take this trade here. I would prefer to see the selling starting to show. Right, that's when I know who will be the sellers, because this blue algorithm here, this blue selling, came in very handy later, as you would see once we headed down much later in the day. You saw that trying to hold your runners became very easy once you identified this. So at this point, this is episode 8. This should already be, well, almost textbook for you, understanding all these very basic concepts here. Now, one of the key traits that I missed, I was away at this time, was this particular trade. I talked about this here. Understanding the teal, this was important, right? You saw teal building liquidity. Yeah, I took a put from here. This orange. Yeah, I did. Pretty good trade there. Okay, this one. I was talking about this, and you saw how the teal was just building liquidity here. So this would have been a good entry, seeing how the market was trying to build liquidity off this teal right there. So I saw the teal building liquidity. I charted it. If you want a recording of my charting, once again, Chacha does it almost every day, in fact. So you can check it out in the serious analysis here. So thank you very much again. Shout out to you, Chacha. And I charted this teal. I missed this because I was away, but you saw how it started buying up. Once you understand how to be identifying the bullish control algorithm right there. Now, ideally, if this were to dig a little deeper, maybe like that, much better trade, because you can see much more clearly the head and shoulder pattern, the inverse head and shoulder pattern, together with the orange algorithm as a support. So if this formed, I would have taken the trade. This one, not so. But if you wanted to, once we broke out of the teal here, you saw the blue algorithm buying, you see the breakout and retrace here from that blue. So you're never really missing out as long as you're able to identify a very clear risk to reward for yourself. So the breakout from here, I could still take a trade here. I missed this, so absolutely fine. I'm not going to risk it, because if this truly wants to head up, you see the market building more liquidity again. And in this case with the teal, I took this trade here on the breakout. Let's see. Where's my trade for that? Just a small one, yeah. So you notice that I've been trading very, very deep in the money options. Partially, I explained that on Wednesday. Also partially because of slightly unwell this week. So the reason I do that is to just manage my risks much better. But obviously, my percentage gains will be so much smaller, requiring more capital to make more money. But then in the safer way, because I'm deep in the money, it's as good as trading shares. I talked about that on Wednesday. You probably have already understood that coming to this Friday video. Now, quite a straightforward trade because of the teal. Now, at this time, I charted a pink here, and you see once again the breakout and retracement. Now, the problem with this, and I warned you since the start of the day, was because you saw how magenta has always been in control here. So this became quite an easy trade to take. You had a magenta tapering, right? You saw magenta in control here, right? And I talked about this. And then you saw the pink starting to build liquidity here. Isn't this a beautiful zombie? Do you see your risks at the top of the range when you have both the bears and the bulls capping the stop range? So this is truly one of the better applications of the control algorithms, when you understand that your risk can be properly managed with the zombie here. So I took a trade here. This trade turned out to be 5 figures, and I managed my risks very well. 1202, I took this trade here at 1202, which is thereabouts here. Right, I saw the breakout right there. Now, when you manage your risks with the magenta and the pink, now this gave me so much confirmation, isn't it? So it capped my top range right here. How do you properly take a trade here with structure? If you were to chart the magenta more diligently here, you would see it very clearly grabbing this particular liquidity here. You see that? Beautiful. Now, the only time this started dumping further was once we broke out of that pink, triggering stops and giving us this beautiful dump right there. See the structure here. It took a zombie here, understanding the top of the range where your stop losses can be. You see the liquidity here from magenta, early liquidity, grabbing it because we were already, well, in a way, tapering at the top range, and we break out of that pink support, triggering stops and increasing volume here, and giving us beautiful selling precision in that green algorithm there. So this is a good early trade. You can learn to take it. It all stems from the concept of a zombie right here. Otherwise, you can always wait for continuation structure, which in this case happened, as I was talking about. Yeah, just wait for continuation structure. You're not truly missing out. I talked about this 9:52. Just imagine that start of the day. Truly isn't a need to start rushing into taking trades. So you see, we broke out of that magenta and we started forming another clear structure here with the blue and the magenta. Just take a look how beautiful this trade is. Take a look. Exactly the same structure, understanding tapering, understanding the breakout, understanding how to apply the algorithms here. Now, at this point, I just want to do a thought experiment with you. Say you miss this, right? So we are here at this point now. You cannot be chasing. There are two alternatives you have to wait for. Firstly, you wait for that magenta, which happened, right? So you see this happening. Yeah, so you could still wait for a good entry instead of chasing this. And secondly, you saw the pink building liquidity for the bulls. So this can absolutely happen. So you're waiting out for here, you're setting alerts if it comes back to pink to rebuild liquidity for the bulls. You cannot be chasing here. So at this point, if say you have missed this particular trade here, now you need to be planning ahead. Do you prepare for the pink or do you prepare for the magenta? And you will see it forming. Now, otherwise, you will get caught in this engulfing. But rebounded back from the resistance, it is particularly also known as a retracement, right? Back down and on that blue here. So once again, see the structure forming, right? We broke out of that magenta, showing the bears want to be in control. We retraced back resistance of the pink, and then we formed a dual algorithm setup here. Not the first time you've seen this. Episode 1, 2, 3, 4. I've shown you many times the dual algorithm setup, especially with the magenta. We started pushing down in the precision, which became stronger here, like that. Absolutely beautiful. I view call this trade here. It's an absolutely beauty because you have been patient and waited for this. So market was kind to give us some action on Friday. Not all the time, so you have to be very careful. And thereafter you see the magenta starting to form here, isn't it? And I told you not to chase here. You have to be very careful because you already started pushing it down in the strongest algorithm. So remember, as I always tell you, you can chase here on the break. On the break from the blue to green, you notice the selling from blue to green is stronger, so you can chase here and catch it up to this. This is a scope here that you want to catch. But otherwise, you cannot start chasing once it's in green because it will slow down and you see the engulfing candle, the green candle here engulfing. So once you see the selling intensity starting to increase and you don't see volume particularly increasing here, which it did actually. This one increased, but it didn't go further down. You just have to be more careful, especially when we are at the, supports of the strongest selling algorithm that we have identified here. You see it bounce back up. Now we identified magenta, so we're expecting more liquidity to start forming. And I was telling you to wait, for more liquidity, isn't it? And you see it happening near end of day. Right, so you just have to be patient, right? So instead of chasing the shorts here, you have to temper your expectations because some of you, you missed out on this and therefore you want to chase this. You have to be very careful, and I keep reminding you, be careful not to chase. So understand the technical explanations of why you don't chase here, because we are already in the strongest selling. You don't see it going further down. And we are already at the supports of that strongest selling algorithm. And we have, the Q's 5-day was here. I talked about that. And we have closed the gap. So these are very strong support levels. And we have somewhat retested. a very key level in this pink 668 that I've indicated near to the 5-day moving average as well. Right, so you see so many key support levels, so you can expect some buyers to be here. We had magenta and we were weakening and now selling in the blue. And I took a call here at that large red candle. It was a pretty good fill. But on hindsight, I could have taken it at a bounce of magenta or on the break of this blue. That would still be better. Instead, I had some drawdown here, but it turned out to be a pretty good trade. And if you remember from episodes 1, 2, or 3, I don't remember, it's the early episodes, I talked about chaining your plays. Now, the reason I am so much more daring in taking this trade here is because I had a massive trade from here. So you see, you're chaining up your plays. So the bigger days that I have is only because I have, big wins prior that I'm able to take bigger risks, especially in the elevated volume environment. I know there will be moves, so I'm willing to take them. And so you see, this is the reason why I have 2 very good trades right there. Now, you cannot call a reversal. This is a zombie, right? I was expecting a bounce because this bounce can be that head for that head and shoulder, which you see it happening, or it can be the head of that inverse head and shoulder pattern, but you can absolutely wait for the bulls to retest this before you consider this going up. So you have to understand the concept of the zombie trade here, especially when we ran out of momentum and that selling continuation. You saw strong supports, right? And you see it's penny perfect, so you can time your risks. You can truly fine-tune your risks so that you maximize your risk to rewards. I told you to protect by magenta, isn't it? Exactly as it is, right? So you notice that magenta can still be in control, and it absolutely still is right there. Right, so I told you to protect by magenta as well. Right here, I think. With magenta in the way, so protect more. Yeah, watch for magenta. So you have to understand trader structure demands, right? You have a target to protect your trade. You understand you have the buying continuation. Now, the reason only I could hold my trade all the way to magenta was only because of this blue buying precision algorithm. So sometimes the market is kind, give us very clear directions in order to protect the trade, so I could maximize my move here. Now, absolutely beautiful trade, and nearing end of day, I warned you about the wedge, and indeed we wedged here to the end. Probably a final. I wouldn't take this, not in the final 5 minutes in the wedge, and a little further away from, well, we're not that close to the algorithms. Maybe you can chart some micro structure right there, but no, it's not something I would trade here. Although it looks great on hindsight, isn't it? It's not something that's tradable on Friday, final 10 minutes here. Not with the algorithms a little far apart. So it's quite straightforward day, isn't it? Understanding the zombie. So you notice this was a zombie trade. This was also a zombie trade that had continuation. And it's all about getting into position. I talked about getting into position in episode 7. So please do watch it. You understand a little bit of what I mean about getting in position. And zombie trades are practically trades to get you in position. And, well, you also noticed that even though we had some very big moves, there's certainty in finding profits, even in small moves like that, 0.5, 1 point moves. You still can make very good money. Even this large red candle here, well, technically speaking, 32, and well, this is, well, technically only a 2 point move here. or slightly less than that, right? Slightly less, maybe 1.7 point here. It's good enough, isn't it? You could just catch a small part of the trade and still make very good money. So learn to identify the smaller moves. Don't be banking on full moves like that, right? What you need to be looking out is the precision algorithms, right? It's more than enough. If you can catch a trade within the precision, you're able to make very good money, right? Just take a look within the precision, right? So you can reload your runners on continuation structure, but by and large, if you can find your way to take a trade within the precision algorithms and just write out the precision algorithms, you will make very good money. So try to learn to identify that. Thank you very much.